Most investors today appear to think that REITs are struggling because of the recent surge in interest rates. But in reality, REIT balance sheets are today the strongest they've ever been, and the high inflation of the recent years has led to really rapid rent growth. As a result, what we've seen happen in most cases is that the positive impact of high inflation has been greater than the negative impact of rising interest expense, and as a result, most REITs have managed to grow their cash flow and keep on hiking their dividends. Despite that, most REITs have seen their share prices collapse over the past year, and therefore I think that quite a few of them are today very opportunistic. Hey, this is Jussi. I run a small investment firm that specializes in REIT investing, and in today's video I want to talk to you about 5 REITs that I expect to hike their dividend later this year. But before I get into it, could you please do me a favor and like this video? That will really help me a lot to grow this channel. And then secondly, I also want to remind you that Seeking Alpha has reactivated a 2-week free trial to my REIT newsletter, so if you want to access my full portfolio, feel free to check it out. I'll put a link somewhere in the description of this video. So the first REIT I want to discuss here is called Vichy Properties Realty Trust. This is one of my largest positions today. It's a net lease REIT that specializes in smaller tenants that operates in secondary markets. This unique approach has historically allowed it to buy properties at materially higher cap rates than its peers like Realty Income, and then on top of that it has also managed to negotiate much better lease terms that are more favorable to the landlord. As a result, this REIT is today still able to grow at a solid pace. It has guided for 6% AFFO growth this year, which is far more than most of its peers. I'll put a chart somewhere on the screen to show this. And this growth is really the result of 2 things. First off, its rents keep on growing steadily year after year according to its leases, which typically include automatic and contractual rent hikes of roughly 2% per year. Then secondly, the REIT is also able to keep on acquiring new properties, still at a positive spread over its cost of capital, resulting in AFFO per share growth. Right now, the REIT has a payout ratio right around 75%. It already hiked its dividend by about 2% earlier this year, and therefore I think it's quite likely that we see another 4 or 5% dividend hike later this year as they achieve their growth target. Then the second REIT I want to discuss is called Stag Industrial. As its name says, it's investing in industrial properties for the most part. And the interesting thing here is that most of its leases are deeply below market, and as a result, as its leases now gradually expire, it's able to hike its rents by about 30%. Then on top of that, its current leases that still have years left on them also include automatic rent hikes of about 3% per year. And then on top of that, it's also still acquiring additional properties. In recent years, this REIT has failed to grow its dividend meaningfully, and it has given it a bit of a bad rep. But I recently got to talk about this topic with the company's CFO, and he explains to me that in recent years they were really focused on deleveraging the balance sheet, on lowering their payout ratio and improving the quality of their portfolio, which, prevented them from hiking their dividend. But now this transformation is mostly complete, and therefore they expect their future dividend growth to roughly equal their FFO per share growth. For this year, they are guiding about 5% cash flow growth, and therefore I think it's quite likely that we see a roughly 5% dividend hike later this year. Then the third REIT is Aggro Realty. This is a smaller peer of Realty Income, which is a very popular net lease REIT, but it's a bit smaller, and so it's able to grow at a faster pace. And the interesting thing about Aggro Realty is that today its payout ratio is only 73%, but their target range is actually 75 to 85%. So even if you assume no growth in its cash flow, you could assume that they're going to hike their dividend later this year just to get back into their target range. But I also expect their cash flow to rise a bit this year, not by much, but 2-3%. And then you add the gap that they need to fill to get back to their target range, and I think it's quite likely that you see a 5% dividend hike later this year. Then the fourth REIT that I think is likely to hike its dividend later this year is called Invitation Homes. This is one of the few REITs that specializes in single-family rentals, and it's doing really well right now because of really 2 reasons. Firstly, it's not dealing with rising interest rates because it has no maturities until 2026. And the second thing really working in its favor is that the surge in interest rates has really made home ownership unaffordable for most people, and as a result it has grown the pool of renters, increasing the demand for its properties, and allowing it to grow its rents very significantly. In the first quarter of this year, it was able to grow its same property rents by about 7%, and today its payout ratio is relatively low, and therefore again I think it's quite likely that we see a roughly 5% dividend hike later this year. And then finally, the fifth REIT that I expect to hike its dividend is called Vichy Properties. This is the biggest casino REIT in the world. I recently interviewed the company's CEO and posted a video of that on this channel. I'll put a link somewhere in the screen so you can check it out. I really like this REIT a lot because just like Essential Properties Realty Trust, it's focusing on a specific niche of the market that's less competitive, and it has allowed it to historically get above average cap rates, better lease terms that are more favorable to the landlord, and it has resulted in faster growth. This year the REIT has guided for about 10% cash flow growth, and historically it has always hiked its dividend on the third quarter. I think that once more this year it's likely that it will hike its dividend, I think by about 5 to 8%. So these are 5 REITs that I think are likely to hike their dividend later this year. Now if you want to learn more about what I'm buying in today's market, feel free to join my REIT newsletter for a 2-week free trial. As I said earlier, I'll put a link somewhere in the description of this video. It will give you immediate access to my entire portfolio, and otherwise if you could like this video, that would really help me a lot. Thank you very much. See you at my next one. Bye bye.